Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 7th, 2016. I usually start by looking at some headlines of the week, reviewing what financial reporters are saying, and I generally find some ones to poke a little bit of fun at and have some fun with. But this week there was hardly any headlines with market commentary. The news is really dominated by the new TV reality show that the 2016 presidential election has become. But I did find one. I did find one article, one headline to look at. So let's take a look. So here's this headline. It's on Market Watch, and the headline says, "Is it time to put this bear market behind us?" What? That's kind of funny. It's even got a nice graphic here, rearview mirror. Um, is it time to put this bear market behind us? Oh, so is a bear market something like, that we can just choose, like, I'm going to quit smoking or I'm going to quit eating too many sweets or something? That's funny. I went on to read this article, and for me it was completely incomprehensible. So either the author is just super smart and way beyond the ability for a normal mortal like myself to comprehend, or it's complete gibberish. Maybe you read the article and let me know. But it makes me want to turn to the reality of the charts even more than normal. Just a quick look at the economic calendar coming up for next week, starting on the 7th. And what's interesting on the economic calendar, you see these reports with red stars are the ones that typically move the market a lot. And there's only two. There's the petroleum status report on Wednesday, the jobless claims on Thursday. That is a super light week for economic reports. If you look back at last week, it was more typical. There's usually 4 or 5 or more of these red star reports. But for this week coming up, nothing. And, the market doesn't like nothing. And so new events, new news may cause volatility in this coming week. We'll just have to wait and see. But very few planned economic reports coming out. So let's seek the refuge of reality in the charts. All right. So here's the S&P 500 futures on a 60-minute chart. I've been showing this a few times over the last several weeks. I think the 60-minute chart is a really good predictor of the short-term moves of the market. Now, we'll review the longer-term charts. I am still convinced that we are in a bear market still. It's not continuing. And whether we choose to put that behind us or not doesn't matter. I think it's going to play out, and the smart money is going to be trading the reality of the market. But I've been projecting this a short-term move. Again, this is some people are calling this the March rally. It really started in February. This is in my analysis what's called a bear market rally. Again, we'll look at longer-term charts, but a completely expected retracement from the sharp moves down we had in December and January. This bear market rally, this move up, this recovery, it had a really clear wave 3, it had a wave 4, and a wave 5. Earlier this week, I was on a show, timingresearch.com, and back here at the start of the week, and I was, we were asked to project what's the market going to do for the rest of last week, and I said, I think it's going to go up. I think it's going to go up because I think this pattern is going to complete. I had this wave 5 target zone established, and that was back here, and it moved right into that target zone. Now, the big question now is what's it going to do next? Well, after a wave 5, we typically get some kind of, either an A, B, C pullback down or a whole new trend down. And so either way takes us down from here. Now, over the first day or two of the week, it may go up a little bit farther. We're still in the target zone, but I think we can expect, and we can see momentum coming out of the oscillator. I think we can expect it to begin heading down through next week. That's just where the pattern takes us. So let's move up to the longer time frames real quick. So here's the actual Dow Jones chart on a daily chart. Every price bar is a day. And you can see we had a very clear lower low, lower high, lower low, lower high, super low, lower high, lower low. This bear pattern is still going on. Now this is that bear market rally that we're in. We would have to go out and take out this high for me to take pause and go, something different happened here. And so we've got a long way to go. I think at some point pretty quick, particularly when we look at the lower time frames, we can expect this to roll over and head down again. And again, just to reiterate the targets, where are we going over the long term? I'm going to change this to a weekly chart real quick. So here's the S&P on a weekly chart. And again, the retracement, the target zone for the bear market is clear down here between these blue lines, 1343 to 1644. That's going to take a long time to play out. This is a weekly chart, and that could happen through 2016, even into 17. But that's the trend we're in, regardless of this this current pull up that we're going through. That's a normal part. Price moves in lower lows, lower highs, lower lows, lower highs, lower lows in a downtrend, and the high probability is that's going to continue. So that's what's going on with the broad index, with the S&P 500. Let's go take a look at gold for just a minute. Here's gold on the weekly chart, and if you remember, for months I've been saying, gold will find a bottom and gold will stage a recovery, particularly as the bear market gets underway. 4 or 5 weeks ago, I said it looks like it's happening, and if we cross this 1113 line, then the recovery in gold has begun. And boom, it has begun with a vengeance. And we were ready for that. We are trading gold-related stocks. We're trading the GLD ETF, and I'll show you real quick here a gold mining stock that we're trading. So because we saw it coming in gold, the technicals were there. We've been watching for a long time for the signals to happen, and when they did, we were ready. And so here's a gold mining stock, MUX, that we got into. We got in at $1.25, and we initially had our stop down here. Our stop is up here now, and current price is at $1.91. We've sold 2/3 of our position. We got 1/3 still riding, and we're going to make at least like 40% on this trade, maybe more if it continues up. So these are the kind of trades you can find when you can read the realities of the market. If you're interested, we've got some other mining stocks that we just got into. Mining is another super hot sector. We got into, I'll just show it real quick here. We got into FCX. Not too long ago, we got into FCX at 770. It's already up at 974. Looks like it's got a long way to go. We're in joy. We're enjoying joy for sure. We're finding some joy in it. We got in at 1312. It's up here at 1768. It's got a long way to go. If you are interested in some of the picks we're taking, again, we follow the market. Right now it's mining, right? It's gold. Pretty soon I'm going to get into oil in a minute. And, there's going to be some amazing trades in energy when oil proves that its recovery has begun. It's going to be very similar to gold. And so if you're interested in finding some of these picks, there's a link coming up on the screen here. There's a video that talks more about my stock picking service, and you can check that out and see if you're interested. But let's go ahead and jump to oil now. So here's the chart for oil. This is the crude oil futures chart. And as you know, been in a massive bear trend for quite some time now. It's come down from really a high of $140 a barrel to down under $30 a barrel in 2016. And that's really nice to be at the pump and pay less than $2 a gallon. But nothing goes down forever, and a normal part of how the market moves in cycles will be for this to have a corrective wave up, and we'll know that's happening. We've had a series of lower lows, lower highs, lower lows. But what's happened recently is we had this lower high, a higher low where it did not go down and put in a new low, and now it looks like it's going to go put in a new high. So if we cross this 3709 line, just like 1113 was a trigger for gold, I think 3709 is a trigger for a retracement, a recovery in oil prices. Now it needs to bust through this with authority. Don't you like how I anthropomorphize a stock chart? It's got to go through that line with some authority, not just a couple ticks, but to blow through it. If it does that, I believe that the retracement, the recovery in oil, has begun. And if it does go through, it won't just move straight to the sky. It'll move in higher highs, higher lows. But the target zone for the retracement in oil is up in the mid 70s. The low end is about 65 up to 85, and the mid range is mid 70s. So there's going to be just some amazing trades, just like we got in gold and mining, when the recovery in oil starts. Hasn't proven it yet. We've got to wait for it to prove. But when it does, it's going to be super exciting. And I think the bear market in the equities isn't over, and that will roll over at some point in the next week or two, highly probable. And then we're going to start taking some more short trades on the stocks that participate in the broad equity market. So lots of good trading to come. Stay tuned. Again, if you're interested in the subscription, you can try it for $7. Try it for $7 for 10 days. You get a money back guarantee. You don't like it, I'll give you your money back. And after that, you pay monthly, and you can cancel at any time. So I invite you to check that out. Participate in the trades we're taking. We've closed 10 trades so far this year. We're at 12% profit. The ones we've got open on gold are going to double that so far. The ones we got open on gold and mining and some other ones, we're going to double that profit just by closing the existing trades, and there's lots more to come. So that's it for the market commentary this week. Stay tuned. We're really going to be watching oil and watching for the market to roll over and to be taking some shorts on stocks that participate in that trend. Thanks, and we will catch you next week. Bye.